Well, hey, welcome back. I'm Dave Dubeau, and today we're going to be talking about how to get capital for real estate investing. Because let's face it, if you want to buy more properties, you need more capital. Okay, so on today's video, I'm going to show you two traditional ways for getting capital. I'm going to show you two creative ways for getting capital. I'm going to show you the best way, in my opinion, for getting capital as well. And then stick around to the end because I'm going to share with you my top secret tip for raising big chunks of capital very, very quickly with just one presentation. I'm going to show you how a client of ours did this to raise $440,000 very, very quickly. And then 6 months later, he rinsed and repeated it and raised 1.2 million. Stay tuned. All right, so the first traditional way to get capital to do more real estate deals is to save up your money and your good credit and then go to your local friendly bank and qualify for a mortgage. That's what most of us do when we're first getting started. We've typically got a full-time job, we got pretty good income, we've got some money saved up, however that came in, and we want to go buy our first investment property. So where do we go? We go to our local bank and we get things rolling there. That's a good way to get things started. However, after that first property or second property or third property, then it starts to get a little bit more difficult. The banks are a lot more persnickety about their lending criteria. So then we have to look at other options. Quite often the second option we go to that's kind of on the traditional side is once we can't go to the bank anymore, now we start going to hard money lenders. And the hard money lenders are great in the sense that typically they're going to be investing based on the deal, not on your personal credit record. So that's really good. You don't have to jump through all the hoops the banks make you go through to qualify for a traditional mortgage. However, you have to have a smoking deal with a ton of equity in it, or you have to come up with a heck of a lot of money for a down payment in order for a hard money lender to give you the money. Plus, the second big disadvantage with those guys is typically their money is very, very expensive. They're designed for bridge type loans for very short-term financing. 3 months, 6 months, maybe a year max. After that, it usually doesn't make much sense. Now, one of the creative ways that you can get financing for your deals is to find creative deals. That's what I did back in the day, 2003 to 2005. I did 18 deals in 18 months, all of them with very little or no money out of my pocket, all by looking for motivated sellers in wonky situations who are willing to do creative deals. So this could look like a sandwiched lease deal, a lease option, rent-own type deal. It could be an option. It could be buying a property subject to the underlying mortgage and financing that's already on it. It could be all sorts of different strategies there for getting into properties. It could be taking the deed just for $1, those kind of things. So there are different ways that you can get into properties creatively with little or no money down. But the challenge with those is that you have to be very, very good at finding motivated sellers and understand how to structure these kind of different deals. Plus, typically these are problematic properties that are going to attract not ideal buyers. So you get, or not ideal tenants either. So you have to kind of weigh the pros and the cons with that. Now, I did a whole video a little while ago on how to do creative deals. Should be up there. I'll try to remember to put that up there and you can check that out. The second creative way to get capital for financing your deals is to focus on owner financing type deals. So you're going to really focus on finding properties that the owner has no underlying mortgage. They own the property free and clear. And then you structure it so that you can get owner financing on those kind of properties. Big benefit there is just kind of like the hard money lender, you don't have to qualify with the bank to get the mortgage. You don't have to qualify to get the financing. And you can negotiate all of this directly with the seller. So the terms tend to be a lot better than if you're working with a hard money lender. You can get the financing a lot cheaper working directly with the seller. Challenge with these kind of deals is they're few and far between. Yeah, there are quite a few properties that are free and clear. I believe in the States is about 1/3 of all of the properties don't have a mortgage on them. However, that doesn't mean that the owner wants to sell their property to you with owner financing. I'd say maybe about 10% of the time they might be open to looking at that. At the end of the day, they're still going to want a big chunk of cash for you for a down payment. So you're still going to have to figure out how to come up with that. Now, in my opinion, the absolute best way to come up with money for financing your real estate deals is to bring on other people's money, to bring on private capital. In fact, that's what we talk about here. I love private capital. right? That's what it's all about. So you want to bring on joint venture partners and private investors to finance your deals. Now, they might not have to finance the whole thing, but they might just come on board, especially a joint venture partner, and come up with the money for the down payment, the closing costs, the renovation costs, all of the hard costs involved with buying the property, and then you get the financing from the bank for the rest of it. That works really, really well. Or you bring on investors, depending on the kind of deals that you're doing. Maybe you get a group of investors together and they bring up all of the money to buy the property outright. Another option, depends on the type of deals you're doing, the location, and the price points is how that's going to work. Now, the big benefits of bringing on joint venture partners and investors is you're going to be able to do a lot more deals. You're going to be able to do them a lot faster. You can start getting into bigger deals because you've got access to more capital. It allows you to accomplish your goals a lot faster than you could on your own. And here's a really, really big benefit. It helps your investor partners accomplish their goals. You're helping them to get involved in real estate investing with no or little effort on their part. You're helping them to do something they cannot or will not do on their own, and that is to buy an investment property. It really is a win-win way to do business. Now, I promised you earlier that I was going to show you my secret way of raising big chunks of cash very, very quickly, and I am. And here it is. It's doing webinars. What's a webinar? A webinar is an online group presentation. So you get a group of people together on Zoom or on some sort of a platform like that, and instead of doing just onesie, twosie type investor presentations, now you're able to show 10, 15, 20 people all at the same time what you're up to, and you're able to get people enrolled en masse with doing this. So webinars are an absolutely fantastic way to raise capital very, very quickly. In fact, our client, Mark Onaba, when we first started working with him, Mark was transitioning from doing small deals into doing big deals. He'd been doing single family homes and condos and that sort of thing. And he had his first apartment building deal on the go. Now, he'd raised some capital from the small deals, but he never raised any money for big deals. So he didn't really know what to do. And he came to me, he said, Dave, I got this deal on the go. I need to raise quite a bit of money quite quickly. What can we do? I said, Mark, let's do a webinar. So we put together a really good presentation for him. We promoted the webinar to his sphere of influence. And I believe we got about 20 people signed up for that webinar. 10 or 12 of them showed up live. We did the presentation. And within a week, Mark was able to raise $440,000 to close on his first apartment building deal. That got him off to the races. 6 months later, he had another good deal on the go. In fact, this one was bigger. We rinsed and repeated the whole webinar process again, and he was able to raise over $1.1 million for that second deal. Now that's great, but here's what's really great. The combination of those two deals and the other properties he had in his portfolio now meant that Mark had enough passive income, had enough cash flow coming in from his real estate portfolio. He was able to walk away from his good, high-paying government job that he hated because he was financially free. How was he able to do that? Because he was able to attract joint venture partners and their capital for his deals, and webinars were a big part of doing that. Now, if you'd like a full-on training on how to do webinars, I'm going to include a link to a training in the description below, and you can check that out. Speaking of free training, if you'd like the big picture of how to attract investors and raise capital, I've got the gist of the thing for you. It's my book. It's free of charge. It's called Money Partner Formula. I'll put the link in the description below, or you can grab your free copy at investorattractionbook.com.